Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Kooima Varilek. Well, the livestock futures all started off a little bit lower this morning. Cattle are trying to come back. And over in the grains, we're seeing mostly lower prices except for a few of the wheat contracts. But Scott, I want to start off in the cattle market like we normally do. Let's talk about the fact that it looks like we've put a low in the futures. But what are you thinking in terms of retracement levels that we're going to see in both live and feeder cattle futures?
Yeah, thanks for having me, and good question, and Merry Christmas for everybody. We'll be talking to anybody before then. So, cattle market, it's put in a violent low. We've all been a part of that. We've seen that. We've been able to retrace from those lows. $13 on the feeders, and good $5 on the fat cattle. So, the question is the low end, and nobody knows the answer to it. I think we all got so gut checked, calling a low, and then the next day we're down another $4, and the next day back up. So it's still that really volatile time in the market where we got a thin trade. The open interest is just staying small. We don't have the funds or large investments, large spec traders trying to come into this market and boost it up to a more normal trading level. So it's a little tough to trade with this thin market. I mean, trading 5 lots is moving the market. We've got these intraday swings, so we've had to get a little bit used to that. I think traders are kind of trying to find out, do I want to be hedged or do I want to be long? Whichever way it is, you almost have to put it on and stay with it and ride some of these waves. I mean, that's just kind of what we're getting used to here. So as far as a retracement, I think we're fundamentally saying that, hey, this market's going to be okay in the long run. So it's been, a deferred, staying a little bit on the propped up kind of side, and the front's a little bit scared yet. So I think if you're trying to be long, it seems like they're trying to dive further back. But the fundamentals should shift a little bit here. These cattle on feed reports, we feel like the last couple that were pretty negative, we had those record high prices, and those feeder calves came to town early. Placing them in the feed yards, as hard as they could to try to capitalize on some of those outstanding profits for a cow calf guy. So it was a great year for those guys, and well deserved, needed it. So now we have to kind of decide. We feel like these feeder calf runs are going to get tight. We're going to start seeing some lower placement numbers, and if they all got placed early, how many are going to be there once we turn the page into the next year? Usually we can count on a pretty good run in January to try to find some feeders, but cash prices are already, we got thinner trade right now in some of those sale barns, but they're staying pretty hot and heavy again. So feel like those feeders are going to be what's going to lead this market out of here once we realize, yep, we're tight. We're going to be tighter next year than we were this year yet again.
And you mentioned cattle on feed and the early placements that got pulled ahead here. And it's kind of reflective of the trade guess here, isn't it? Going into the report.
That does kind of reflect it. We got our 102 on feed. So, we threw them in the feed yard and less to come. So a 96% placement estimate. And the marketing numbers a little bit back at 93. Could be showing some of the weight issues, or maybe some people fighting the market. I haven't, heard a mountain of trouble out there that guys are waiting and waiting. There's been cash trade that's been available to clean those up, but cattle on feed report does look like it's starting to say these placements are going to get short again.
What about cash? We've had 6 lower weeks. There's optimism. Maybe we can turn that trend here this week. And case in point, Packers only bought 44,000 head negotiated last week. Kill has been on the rise. And so are they short bought?
It feels like they have been short bought for so long, but it's not really showing up in the prices so much. The Packers have done an excellent job maintaining their chain speed, and it feels like we start the week and we try to figure out what was cash last week. Usually we've got a really good feel and know where that's at, but it's pretty sparse and slow, just as you kind of alluded to. So there's been some 168 last week, and right on the close on Friday, we had some 170 bits in the South. So that was a good sign to have that. I mean, immediately when the markets closed, that's when that news started to circulate. So I think there's a little bit of optimism there on the cash that we could try to be higher this week, because yes, Packer does want the cattle, need the cattle. They've got good margins. They just haven't had to pay up for any of these cattle yet. They've just waited for the cattle to come to them. But finally, you've got a few regionals sneaking out there and paying an extra $1 here or an extra $2 there. So that's a good sign. Really looking for the black cattle. They're still wanting them. And then once you actually take a trade, it's, when do you want them to go? They'll take them whenever. So I do think that the Packers short bought, but I feel like they have been for the entire fall, but hasn't really mattered a lot. So it's just the kind of the market that we deal with. I mean, we've got heavy formula trade in the whole cattle sector. So just to stand on the small number of negotiated cattle that are left, it's tough to rally the market. So we're unfortunately in a market that supply is the only thing that we can get a rally off of, no matter how good demand is. It seems like that's not what's going to fully carry the market. I mean, we saw that when we were 80-cent fats and record high boxes. So we've been through some of those struggles. So the setup with all the leverage that the Packers have, it's supply. That's the only thing we can stand on. I guess we have to raise less calves and get rid of cows, or we get really, really current.
Yeah, and that's too bad. Hog market is lower this morning, and we just can't seem to get the cash and the cutout to catch. So it's going to be kind of a sloppy affair until we find a bottom there, right?
Yeah, it feels a little sloppy to me. Had the sharp up day last week, and
right, that limit up day.
Yep, you're just left scratching your head. Okay, cash was not the leader.
I know.
The cutout was not the leader. So yeah, I had to try to figure out why, and I think that was a little bit highlighted. After a limit up day, you can't follow through higher. So I think that's still the market that we have in the hogs. We've got increased weights and just a large supply in the barns, and now you're coming into some slower holiday kills. So I think that that's not going to help the markets out. And was kind of a note that the Prop 12, the deadline coming up on January 1, there's still going to be some uncertainty to what unfolds there and how hard has this California demand been hit on the hogs, and it's sounding pretty severe. So a lot of reasons there for me to say this market does not have to rally, and it's going to stay sloppy for months to come yet.
Yeah. And we do have the hogs and pigs report out on Friday, but not sure that's going to be much of an event. It usually isn't.
Yeah, probably not. So yeah, we got hogs and pigs and cattle on feed Friday at 2:00. Most of your brokers are going to have an attitude problem by then and ready to get to Christmas. So
no doubt.
Digest those numbers real fast here before the holiday weekend.
Yeah. Corn and soybeans lower here this morning. Really it feels risk off, but it's really has to do with the weather, doesn't it?
Yep, it feels like weather's the main story. We've got some increased wheat conditions. We've got some moisture there. We've got Brazil, Argentina getting some rain, and it's been the drought, and we're behind on rainfall in South America. So how much rain? We can arm wrestle over that, but regardless, we've got some rain entering the forecast and starting to happen. So these markets have to be aware of that. The bulls are going to stand in there and say, and I kind of have to chuckle that, yep, we're still behind, on our yearly rainfall. And yep, it even rains a little bit during drought years. So you can already feel the rebuttal, I guess, from what's happening when it's starting to rain. So regardless, it's raining. And I think that's part of the reason the market's down.
Yeah. And it's easier to move the market here with lighter volumes. So got to be a little bit aware of that as well. All right, Scott Varilek, Kooima Kooima Varilek, that is Markets Now.